going on, everyone? If you were watching the market Friday at the close during the last hour, you would clearly see the market began to skyrocket. All right, so in today's video, we're going to go into exactly why that happened and some implications on the momentum shift currently in the market and certain scenarios of where the market can go from here. Okay, so at 2:50 p.m., news came out that President Biden invited the Russian president as well as the Chinese president to global climate talks. All right. So now what this means is that it means that we are peacefully reaching out to our essentially like enemy nations, and we are trying to create a peaceful environment with them. Right. So when that happens, right, when essentially we want to become peaceful with other nations, especially with China and Russia, corporations become extremely happy about that. For example, because Apple is the third largest company in the world, worth like $1.3 trillion. Okay. Most of its manufacturing is done in China. So when many large companies, they depend on positive relations with America and China for their business to continue to sustain itself. Okay. So at 2:50 p.m., that's when that news hit the Thinkorswim news, right? You use TD Ameritrade, and then you could download Thinkorswim. You have access to like live news and everything for free. Okay. All right. So now this is a 1 minute chart of the Russell 2000. Right. This is just the Russell 2000 futures chart. There's no gaps on this chart. You can't really gap up or gap down. This is you're able to trade this pre-market and after hours. So this is the futures chart. Anyway, yeah, this is basically just the Russell 2000. So 12 p.m., right? You can see that 12 p.m. is at the bottom of the screen. And you add 2 hours to 12 p.m., you get 14, right? So 2:50 p.m. was essentially when that news came out, right? This is the 1 minute chart. It was, I think, specifically 2:50 and like 48 seconds. Okay, so now as we go further and further into 14:50, we look at this minute. This is 14:50, which is 2:50 p.m. It happened at the end of that minute. So as that minute ended, that news came, the market ended up just skyrocketing and bouncing all the way off of this trend line, broke above this Fibonacci level, broke, retested everything, and then broke up even higher. So that news caused the bull rally into the last hour of the market for Friday, right? And I want to talk about the implications on momentum for something like that to happen. All right. All right. So this is the hourly chart of the Russell 2000. Okay. And down here, I have the MACD indicator, which is a momentum indicator. So I want to talk about the shift in momentum to the downside, as well as the shift of momentum that we're currently undergoing. All right. So now back on March 17th, the MACD, to become oversold on the MACD, really, you need to have this level you need to have the blue line below the yellow line. Okay, so when that happens, essentially, like I've been saying in a lot of my videos, is when that happens, that gives a lot of potential for an upward move. Okay, algorithms look for this, and if you can find support close to where the MACD is also oversold, that is a good buy indicator. Okay, so that's exactly what happened. We bottomed out and created support right here. Okay, we bounced up very, very high on the MACD. So now, as we crossed above all of these levels of resistance, right, now we're consolidating a bit. So what happened on the MACD is, again, when we're extremely oversold, that's a good buy indicator. Okay, but now equally, when we're extremely overbought, it becomes a very good sell indicator. So right here, people begin to buy puts, but right here, people are buying calls. All right. So that's exactly what happened. So we bounced out of oversold on the MACD in a very bullish way. We became overbought. Right. So now, as we became overbought, it's obvious that would happen, right? Because we moved up in such a bullish way. That's fine. So now what needs to happen is this bullish structure needs to hold. Okay, the bullish structure needs to hold, and now we're extremely oversold on the MACD. So if we're going by that same logic of what happened before when we were oversold, we should see a huge move because we're even more the distance from the MACD line for these levels over here were so much larger, and you can see there's so much more space in between them. Okay, that's basically what it means, than it was over here. Okay, which means that there's so much more room to go upward. So now, as we can see, we were extremely oversold. We held this level of support and we began breaking above it. Okay, so the MACD line crossed above the yellow line, which is normally a very bullish um, situation, right? It's a very bullish sign, right? We got back to this level of resistance without the MACD even having to retest that area. Okay, so that's another huge bullish sign. Okay, but what ended up happening is purely from a price action standpoint, we couldn't break this level of resistance. So because the momentum was so strong upward still, right? And the MACD was extremely heavy to the upside, which means that there was so much room to go upward, right? The fact that we fell caused us to fall very, very, very hard, very quickly. Okay. We had an uptrend as well. We were at support on the uptrend. If this level broke, because of the huge momentum that was already built overall for the past like few weeks, when we broke this level of support, we broke very, very hard. All right. So now we can look at what happened in the MACD after we fell this hard. Okay. So now the MACD is very, very, very oversold right here, as we can see, right? Over here, from a very small oversold point, we bounced up very heavily. So if we took that same logic, right, we're at this level of support, very, very important level of support, extremely oversold. This is a great buying opportunity, all right? That's what everyone is starting to think. Amazing buying opportunity. This level of support needs to hold. What ends up happening is we worked off of the oversold condition very, very poorly, okay? So we got all the way out of basically getting oversold, right? We worked off all of this potential firepower and momentum for us to skyrocket. And all we did in the price action standpoint was bounce up maybe 0.5% or a percentage, which is garbage. Okay. Where we saw in that same situation, we were barely oversold, but we bounced up so hard over here, a completely garbage, very, very, very bearish move. Okay. But now, very, very, very bearish move. That's why we broke, this level of support. So now people are thinking at this point, look, like we found the bottom again, very similar to what happened here. This is great. Like we found the bottom and, we didn't cross below, but we bounced off exactly on the MACD line, right? We bounced exactly off the MACD line. We created the double bottom, similar to what happened before, right? Things are looking bullish again. The momentum is back. Okay? This was just it, don't worry about that. It was a dip buying opportunity. Healthy dip, right? People bought the dip. The MACD became extremely overbought again. All right. So now it looks much better than it did here. All right. It looks very similar to this. The MACD is now oversold, but we're still in a bullish structure. We're still in a bullish scenario. We're still above this resistance line. The MACD is still it's still oversold here, as you can see. We're above this support. Things are looking good, right? But then again, as we broke this trend, right? If you could just make it right here. So, right, we broke, and that's when the momentum really started to puke, right? We couldn't get out of the oversold position in a bullish way. We were very, very oversold right here, right? We ended up only making it back to this level of resistance, very similar to what happened over here. We ended up only making it back to this level of resistance. We couldn't even break it. Exactly what happened back here. And because we couldn't break it, we ended up falling even more. exactly what happened over here. Okay, so we saw this exact pattern essentially play out twice, right? And then we just really started picking up steam and falling very, very fast, very, very hard. All right. So now what happened, right? In the past 2 days, on Thursday and on Friday, right? We found a bottom, right? We found a bottom, and the MACD also, you know, it finally started to bounce, right? We were extremely oversold, and now basically what I want everyone to think of is in terms of like water. Okay, so think of momentum in terms of waves. All right, so now imagine, okay, so now imagine there's a wall, right? And the wall is this level of support down here. All right, so there's an imaginary wall, whatever, don't worry about the number. All right, so there's a wall, and waves are approaching this wall at, you know, 20 miles per hour. All right, so you have a bunch of water. I don't know how fast water goes. I don't know any of the specifics, but just arbitrarily imagine there's water approaching this level of this wall at 20 miles per hour. So not only so there's a lot of pressure coming onto the market to have a bullish move. Okay, so it becomes very hard to bounce out of this. Okay, so now not only did we stop this 20 miles per hour, right, at this downward level of at this wall when it finally touched, not only did we stop this 20 miles per hour that was coming at us, we shot it back up approximately, probably like you can say 25 to 30 in the opposite direction. Okay, because the velocity that we moved upwards is much faster than the velocity that was already coming at us, and that is extremely bullish. Okay, that is extremely, extremely bullish. So we negated this 20 that was coming at us, and we're pushing back an extra 25 or 30. Okay, so overall, that's that's extremely bullish, and the momentum that we're pushing out is very, very bullish. Okay, so now if you're a bear, right? If you're bearish on the market, okay, and you didn't catch this bottom, like like we did, right? This was exactly the level I said that I wanted. So this is the 2000 futures, but this is basically where the IWM, I said it needed to hold like 207, and I wanted to buy against that level, and I would have a stop for 205, right? This was that area. If you bought into this area, right, you're fine, you're good. But if you're bearish, right, you still think this momentum is going to persist. You think that this little pop right here in the past 2 days, those were just, just luck. Obviously, people just want to cover their shorts. We needed to have, a dead cat bounce, whatever, right? So if you are bearish on the market, you want the market to give you a very, very good risk reward buying opportunity, and a position for you to get into a very high risk, high reward, low risk trade. Okay, so that area would be, we would need to cross over this point, right? But it's still not the cleanest level of resistance. Somewhere that has extreme levels of resistance would be this whole area right here, right? So if you're bearish, you want the IWM and the market in general to get to extremely resistance heavy areas. So that would be on the futures, it would be around 225 to 226, right? So now if we go to the IWM, that same area would correlate to 223 to 224, essentially where this gap was on the IWM. So this is the Russell 2000 ETF. The other chart were the futures contracts. So we see gaps here. So this area is extremely important level of resistance. It's also a gap, right? So gaps tend to want to always be filled, right? So, and it's also the 38.2% Fibonacci level. So that would essentially be a very, very safe time for bears to want to add to their shorts, okay? Because over here, you can add to a short, and then you could have a tight stop loss, right? Because that's the prevailing momentum currently of the shorter term trend. If that negates itself, then okay, if it crosses above even 228.30, then, or somewhere like, above this resistance, 229, if it crosses above that, then 100%, like, I was wrong for even trying to be bearish in this entire situation, right? But obviously, depending on where you add to your shorts, if you're bearish, you have a tight stop loss, whatever. But this area is not where people really want to add to their shorts because we fell so heavily. A retracement, right? Retracements usually break the 78.2% fib level. They retrace back to the 50% usually, right? At least, or get up above to the upper quartile of the Fibonacci levels. So I'm looking at this backwards, but we would approach the 50% or the 38.2% before we get back downwards and fall even heavier. Okay, so now this is the Russell 2000 futures again. What this needs to hold. All right, this entire structure, this momentum needs to hold. So now if this doesn't hold, right, and we don't continue upward, then the downward move is going to be so strong and bearish and disgusting, right? I don't think that people would want, a move like that to happen, because on a shorter term, right, on a much shorter time frame, we saw this happen. Okay. Now, now over the course of days, though, right, if this scenario happened, but we attribute it to over the course of days, then the IWM will potentially fall back down below this level, the wall that we created with the momentum, and it would create newer lows. All right, so now that's what bears want. They want to get a really, really good price to add to their shorts, and then get a much better place to add to their shorts and get a much better trade, right? So that's exactly what they want. So now this momentum needs to hold, and these areas really need to break. So but in the short term, we're bullish. So which is really, really good for us because we're on the good side of the trade. Right now, there's no reason to go short because all of the momentum is pushing upward. So we're in the clear regardless. So this is great. But now just be careful because if it starts to break, we're going to see huge capitulations to the downside once more. But currently, we're on the good side of the trade. But if we do begin to see huge, downward moves, right now the market is extremely volatile in these scenarios. If we break from here, right, after making it these highs, we break from here, that's exactly how limit down situations begin. And that's exactly how, and this is exactly the environment where huge funds just go under and get liquidated overnight. So they could be in a $15 billion position, right? Because maybe potentially, for example, if a fund was short the market, right, and we had a huge rally, they could potentially have lost, billions of dollars on the run up, right? But because they lost billions of dollars on this trade, they would have to sell all of their other winning trades. So say, for example, they're in this other stock, it's doing really, really well, and they're in, another stock, it's doing really, really well. To cover the losses for this trade, they have to sell all of their other winning positions, right? So what happens to those other winning positions is those stocks begin to fall. So the more funds and hedge funds that something like that happens to, it creates an extremely volatile, violent market, which is the exact environment that was created, even last year or every single time, market corrections happen. This is exactly the volatility that we need for limit down or limit up situations and scenarios where the market is up, 5 or 7% overnight. So this is a very, very important time, an interesting time right now for the market. The momentum super strong to the downside, and we found a wall. The momentum held that wall, and now we're sharply moving upward. So now we need to see if we can maintain this strength, create some sort of like a retracement, maybe potentially above, support areas, and then bounce back even higher. So that's currently what's going on. What needs to happen really in the market, um, from a momentum standpoint. I was talking about this for 20 minutes. All right, so now this is a daily chart of the SPY. Now we see something very, similar to what happened before on the, I think it was the 1 hour chart of the IWM, but this is the daily of the SPY. So we had an extremely bullish close, obviously. We're approaching this level of resistance once more. We just broke above this. We just broke above this. We just became overbought on the MACD. We just crossed above. We were extremely oversold. We bounced off of it very, very heavy, very similar to what we saw before. We take this same logic. We were very, very oversold, and we bounced very, very high. Okay, so now we take that same logic. We're very, very oversold. So now to get overbought on the MACD, the fact that we're almost at resistance once more, we're almost at resistance again, and we only crossed above just a little bit. Okay, so the patterns are beginning to persist once more. If we break above and we get oversold on the MACD to these levels once more, then logic would tell you that the SPY would be trading way up here. Okay, so anything up here is great if you're bullish. All right, but we need to see if it can break above the recent all-time highs, and we need to see if this momentum upward is still strong enough to create new highs. All right, so that's very, very important on the SPY. The high was 398.12. Okay, so 398.12 is a very important level on the SPY. The Q's had a very important day as well. It's barely crossing over the MACD currently. It had a huge green day, but it's sitting at the 10 simple moving average, and the next level of resistance is going to be 318.04. Okay, so that needs to break for it to continue its upward move. The downward support is 314.10. All right, so now the IWM. So we see these three channels that were created of support. It held the lower one. It is testing currently the middle one, right? And it's currently testing the 50 simple moving average. And the IWM hasn't even crossed above the MACD line yet. That was the Russell futures that we were looking at. But on the daily of the IWM, we haven't even crossed above it yet. But we saw on the SPY and the QQQ that it did. So that would mean that the IWM potentially has the most upside room still left to go. Okay, which would bring us to that gap around 223 to 224 area where people would potentially want to begin to get short. But because we're bullish, that means we're on the right side of the trade currently, I feel. Again, we could be completely wrong about everything, but that's where I think that the market would want to go. I could be completely wrong. These levels, we're just going to trade these levels blindly, right? It's what we've been doing intraday. It's what we've been doing constantly, really. Like we see a level, we're long above it or short below it, okay? So this is, again, what's going to happen. An important level currently is today's high, which is 220.68, as well as the 50% Fibonacci level at 220.87. Above that and above these trend lines, we're bullish. Below it, we're bearish. Okay, we're not gonna get ahead and catch any fall. I mean, we caught a falling knife here, but yeah. So now things can get really choppy because we're approaching really, really good trades for the bear side. Okay, on the IWM. The U.S. 10-year yield had a green day on Friday. The correlation doesn't really seem to exist much, but it's retesting this the trend line again. So if we break above that, then it could be really, really bad for the Nasdaq in the short term. But let's see how that works out. So because we can trade Bitcoin every single day, right? This was Friday's close on Bitcoin, right? We're long Mara calls, right? And the correlation between the broad markets and Bitcoin has been very, very strong recently. Okay, so the fact that Bitcoin continued upward into the weekend, right, is very, very bullish for all of the indexes and very bullish for the stock market. So, which gives me another reason to believe that we're going to retest the gap area on the IWM. The fact that Bitcoin is also bullish, we're gonna, in my opinion, we're gonna retest this gap right here. So, yeah, it's very, very good that Bitcoin is bullish. We're bullish on miracles. I hope this move persists into Monday at like 9:30 because we're gonna see like huge gains on Mara, hopefully. So, yes, there's that. All right, so now if we also look at the dollar, right? The dollar is topping as well. The MACD is extremely overbought. It needs to fall. So when the dollar usually falls, indices, Bitcoin, etc., begins to do much better. So we're also going to be looking at the dollar. The dollar broke above the 200 simple moving average, which is very, very bullish at 92.56. Let's see if that level of support holds. If not, then, you know, as we fall back lower, these indices should be popping upward. All right. So now let's go ahead and look at the stocks that you guys want me to do an analysis on. All right. So GameStop. GameStop, first of all, to the moon. I'm just kidding, but to the moon. All right. I'm not a financial advisor. This isn't financial advice, but GameStop to the moon. Okay. Uh, if you if this is a part of the movement, like you don't really care about the intraday trades. So if you want to buy, you hold, you don't really look at it again. You just keep adding more when you get more money. But again, I'm not your financial advisor. This isn't financial advice. But if you want to trade it, okay, 156 needs to hold. All right, it's the 61.8% fib level. 156 needs to hold. As you can see, it broke the downward momentum. So this trend line, there was downward momentum. It broke that, and it skyrocketed even further the next day. So now, we began retesting it a bit. So now we need to see if GameStop can essentially hold these lows, really, right? If it doesn't hold these lows, then another very nice, safe buying opportunity would be another retest of the trend line here. But yeah, essentially 155 needs to hold. And then 193.50 is another key level of resistance. So 193.50 needs to break to the upside. From there, that's when we get the 200s. So yeah, those are the levels for GameStop. IDEX, it's a pretty interesting trade because it's in an uptrend currently, right? I mean, it doesn't really look that way, right? But then technically, it fell back down to this level of support. And when it's happened before, there's always been like a pop. Obviously, when it happened here, a huge pop happened here, popped up again from 230 to 350 ish. So now we're here, and we can again, if you want to go long, you can just long and have a stop loss if it falls below this trend line, right? Right, or you can have another stop loss, if it falls below 267. But in general, this would be like a decent-ish risk reward trade if you're very bullish on the company. I have nothing really, I don't really know much about it. I trade it, but I'm not sure about the specific financials. Um, but yeah, if you think that it's going to be bullish, you could get a nice, decent risk reward trade if you have tight stops down here. But I would recommend waiting for a touch of this trend line, or to give some sort of bullish confirmation, and then a retest of that support. All right, I don't want to buy the momentum and then be wrong about it and then have it go the opposite way, especially on a company like this. Speaking of companies like this, Workhorse. Workhorse is garbage. But if you want to go long currently, it gives you a very decent risk reward. So if you have a stop right below the most recent lows, which is 1187, right? So if you set a stop below that level and you were to buy it currently, and for some reason you think that Workhorse, I don't know how they did in earnings, but for some reason you think that Workhorse is going to, go back into the 25 plus area, you're risking, $2 essentially in exchange to make 10. potentially, right? So that's like a 5-to-1 risk reward. You could take that trade. It would be a, good risk reward trade. AHT. AHT is also at an interesting point. It bounced off of this level of support, but now it's approaching an extremely important level of resistance that also coincides with this line right here, which is the 50 simple moving average. All right, so now it needs to break this 50 simple moving average at 318. If we can cross above 318 and create some sort of support, that's the area that I would feel comfortable buying, um, you know, for the bulls, right? Or if you want to buy short term currently, you can have a tight stop below this level, right? But I wouldn't buy unless you have a tight stop against this low, unless you have a tight stop against as it crosses above this trend line, or if you wait for it to fall down here and you have a tight stop below the break of this trend line. So there's three, you know, decent trades that you can make currently on AHT. OCGN, same thing. You could just have a top tight stop below the most recent lows if you think that it's going to bounce back up. It also just recently had earnings and it's been falling. So I'm not sure what happened. But another thing is that it broke the 50 simple moving average, but it's trading around it, which can potentially mean that it is decent support, right? But then if that breaks, then $6 is a safe area that I would also, feel comfortable potentially buying. Um, Depending on the company, I have no idea, but it's clearly, you can see that it's in an uptrend. It's bullish currently. This was just a retrace from a huge, move. But again, I'm not sure about the news. But yeah, there's specific trades you can make on OCGN as well if you have tight stops. That would also give, decent risk reward. If you were to buy it at 6 and you think it's going to go to 10, you set like a stop loss for 550 even. You're getting really good risk reward at multiple different areas. All right, so REGI, a very similar setup. This is another pretty decent risk reward setup if you want to go long against the most recent lows. If you set a stop a bit below it for a potential move into even the upper 70s or 80s, you're risking what, $5 essentially for a potential $20 move, really. So again, it's a 4-to-1 plus risk reward trade. It had earnings though recently, and it's been falling ever since. So currently, clearly, it didn't really have good earnings, but the market in general has been falling as well. So that can also be a factor. As the market rebounds, REGI can be a good potential play for a bullish trade. It's good risk reward, and yeah, it's actually a pretty good trade as well. CSTR, I think this is a Canadian company, very similar to these other companies. It needs to hold a very similar setup to the other companies. It's in an uptrend, right? It had a huge run up, right? So now this is just the retest of that initial uptrend line. So really 21.5 needs to hold. If 21.5 holds, it can retest back into the 30s, but again, I don't really know anything about the company. I've never traded it. So, but it has a lot of resistance to break above 30 and 35, and all of this whole area needs to break above. And then there's a gap from um, 36 to 41 cents. So there's a huge gap here that also needs to potentially be filled. So there's a lot of upside potential on this as well. If you buy it safe and you stick to the levels, this is also potentially a good risk reward trade. NNDM, another interesting play. We did analysis on this recently. It needs to break $9.04 for it to continue bullish, and it needs to hold 840. Right, we're in an uptrend as well. Another like good area to buy it at would be as it touches this trend line, right? And then you could just set a stop loss for below the trend line, or you can wait for it to retest, 836. But that's what a lot of people did. They just used 836 as a level. So you have to look for certain levels where price bounced off of in the past, right? So for example, one that is a bit more justifiable to us currently, since the price is trading close to it, would be 881 or 882. So if it crosses above 882, you can trade against that level and have a, tight stop um, below that level if you want to go long. All right, or you can wait for it to test this trend line and have a stop loss below the trend line. All right, BA looks really, BA was amazing, but it had a false breakout above the downward momentum, and it fell back into the downward momentum once more, and that is very very bearish. So that is not good at all. It needs to hold the 20 EMA, which is at um, 243.26. Right, so it needs to hold that level, 243.26. If it doesn't, but if you want to, if you're bullish, right, you can buy calls or you can buy the stock as it falls to like 239. You could have a stop loss below that, or obviously you can wait for it to retest these lows, which is at 231.70, and have a stop loss below that. Or then you wait for the really really amazing support, which is this trend line, and you wait for a bounce on the trend line. You just connect it from February 1st, and you see the trend line, um, right, and connect it to February 23rd and March 5th, right? So you wait for it to test around this area, and then you can buy it. But right now it looks very bearish. It didn't cross above. It needs to cross above, and then another safe area would be to buy as it retests the trend line, and then it could go higher. So there's multiple trades you can make on BA as well. CHPT, very tight stop. You can just buy it at these lows or at the most recent lows on March 5th at 1950. So you could buy at these levels, have a stop loss below 1950, and you can potentially aim for $25 plus potentially on CHPT. Neo, same concept as CHPT. You could just buy currently against the lows at 31.91 or the lows at 35.12. Have a tight stop below both of them and just aim for potentially the 40s, in the mid 40s and above on Neo. And if the broad market starts to rebound, right, Tesla would also begin to rebound. So all of the EV stocks and everything that were beaten down will begin to start rallying as well. So all of these bullish setups would begin to work much better if the broad markets begin to bounce as well. Okay. All right. So CLOV, another similar position for CLOV as well. You have multiple places to go long, but it needs to break 825. It needs to break 825, and then there's a lot of resistance. You can see that the 10 simple moving average and the 20 exponential moving average are essentially the exact same number, 834 and 837. So these levels really need to break. So yeah, Clove has a lot of upside room, but there's a lot of downward pressure. Okay, so I'd be careful about going long Clove unless you get it at a very, very like decent price and you have very, very tight stops. Okay, AMC, it's in an uptrend. It needs to hold 990. Right, if AMC holds 990, obviously AMC is also going to the moon, right? But AMC needs to hold 990. Anything above that, you could just buy it and hopefully it'll go up. You could have a tight stop below 990, and yeah, INTC was an amazing stock. I completely was not paying attention to this at all. Um, but yeah, so certain levels that we can buy the dip on this would be at 6408 and then 6317, right? Those are multiple positions that you can enter and then have a tight stop below them, or you can, go for a much safer play around the 62 and the 62 to 6250 area. If you can get a price there, that would be a much safer play for Intel. But yeah, this week, right? Like this upcoming week is going to be very, very interesting for the market because we need to see if we can continue moving upward or if, we stop here a bit and we consolidate and we hold these levels of support. If we can't hold these levels of support after having a false breakout, right? And we can't hold these levels of momentum, then the market can crash even further. Like, obviously not to the levels that I just drew, but the market can fall much further from where we just recently bounced and potentially break these levels of support. So I'd be really, really careful and I just be trading very, very safely. And regardless of whether you are bullish or bearish on the market currently, whether you think that these prices and everything in the stocks are justified, you need to trade the levels completely blindly. And yeah, you just trade the levels. If it crosses above a certain point, become bullish. If it crosses below a certain point, become bearish. All right, so that's just basically how you have to trade. Regardless, you have to put your emotions to the side. Okay, so I hope you guys enjoyed the video. It's 41 minutes long. If you watch the entire thing, you might as well just drop a comment of like how amazing the video was, or you might as well like it. Yeah, if there's anything that I could have done better, anything differently, if there's any stocks that you guys want me to do analysis on, by all means drop a comment and I'll do an analysis on that for my next video. So yeah, I hope you guys enjoyed it and have an amazing Sunday.